What's up, everyone? In this video, we're going to be talking about how to get started investing from the beginning. The stock market crashed this year, basically falling over 25% from its highs to its lows, and this presents an amazing opportunity for people who have not yet started to invest to get started. Investing is a great thing to know, and it is definitely very lucrative. So basically in this video, we're going to walk through all of the hard lessons we learned and saving you guys a bunch of time and mistakes for your guys' investing, I guess you could say, process. So Hunter, now the stock market is very low. A bunch of stocks got destroyed this year. Facebook, from its high to its low, went from $384 to around $168. Netflix went from $700 to $184. Amazon went from $188 to $103. And just stocks are low right now. And I think this is like the perfect opportunity for new investors because a lot of stocks are low, volatility is high, and you learn a lot of tough things now that will be extremely useful later in your investing career, you can say.
Yeah. If you had started investing last year, and right now you would probably be ready to throw in the towel. So if you're going to start, it's better to start. You just get lucky. You just got lucky that if you're starting now, you caught it at a pretty good time to start investing. A lot of stocks are cheap. That doesn't mean they're cheaper. A lot of stocks are cheaper than they were. That doesn't mean that every stock in the market is at a good price because, like I said, you can have a good company way overvalued. It falls in half. It could still be overvalued. And
Right.
you have to wait years to make up for those losses. Like Microsoft didn't pass its 2000 high, I don't think, until like 2016. And it's Microsoft.
Yeah.
It's one of the biggest
Right.
companies in the world. Amazon went from like over 100 something to like three or $6 or something in 2020 or in 2000, and then it didn't recover for years. And Amazon, one of the biggest companies in the world. Same thing with Apple, but Apple wasn't that big back then. They were like bankruptcy risks and stuff like that. So
Right, for sure. So basically stocks are low right now. It doesn't mean it's the bottom, but the main point is that stocks are definitely low and a lot of companies are at good levels. Like Hunter said, not every single company out there is undervalued, but it's like when you have giant companies that dropped by 50% or more, it's better to start investing during that time rather than when everyone is, celebrating because stocks just broke all, new highs. I know it sounds kind of weird, but you actually want to get started investing when everyone else is panicking and when stocks are low because theoretically you have better risk reward setups. You know what I mean? Because valuations are lower. So, Hunter, do you have anything else you want to say related to just like valuations right now and current market sentiment that might be helpful to know for a new investor?
yeah, yes, if you are new or not new and the sentiment isn't absolutely abysmal, then it still probably could go quite a bit lower. When you start seeing the like lines to rooftops of buildings, that's when you should be putting money in, like just dumping money in the market. But I would say like the index, like the SPY or something like that. Like if things are really bad and you don't want to take the risk of picking a company that's going to go bankrupt in a recession or something like that because you don't know anything about like doing stock research, which is fine. Most people should have most of their money in the SPY or market-based index anyways. Then you could just put it in SPY and you're just banking on the U.S. economy recovering at some point, and it always has. So pretty safe bet. And if it doesn't, you're probably not going to be too worried about the investment you made.
Yeah. So like stocks can go lower, but it's like as long as you slowly buy it over time, assuming you're investing into good companies or like the SPY, which is the S&P 500, you should be good. So like just to give everyone an example, the SPY right now, which is basically the S&P 500, is currently around $381. Let's say it goes to lows of like 320. As long as you're buying in slowly along the way, so let's say you buy a little bit at 380, a little bit at 360, and a little bit at 320 and you just keep slowly buying in, as that price goes up in the future, even though you didn't catch the bottom, you will still make money. And the reason you want to buy in slowly is because nobody, like not even like the multi-billionaires in the stock market, they cannot even catch the bottom. It's impossible to do that consistently. So that's why you just have to like slowly buy in. And as long as you're buying good companies, which we'll show you how to do on the channel, then you will do good over long periods of time.
Yeah. If you got into investing thinking you're going to catch tops and bottoms, you're not. Just get it out of your head. You're not going to do it. You might do it once or twice on like, it's going to be luck though. It's not going to be like, oh, yeah. I knew. No, you don't. Nobody knows. Warren Buffett doesn't know, and he's the most successful investor in history.
Yeah, and you don't even have to know how to catch the tops and bottoms, exactly. like you just said. You know, like it's just like you won't be able to, but luckily you don't have to. You know, like you just said, Warren Buffett doesn't even do that, and he's made a little bit of money from the stock market, a little bit. Oh gosh, but yeah, so that's the introduction. If you are convinced that now's a good time to at least start to learn about investing, in order to make trades, you have to go through a broker. There are a bunch of different brokers out there. Some are good, some are bad, but it all depends on your investing needs. You know, like if you're looking for like a long-term investing IRA, you're going to go to a completely different broker than if you're looking to, day trade options every day. You know, it's just like a lot of times it depends on your needs. Generally speaking, when you're new to the stock market, you want to not trade every day, right? And the stock market can be very complex. So normally you don't go to like the top tier brokers just to start off because you won't know how to do anything. So some of the beginner brokers out there, of course you have Robinhood, which basically everyone knows about. You have Webull. I would say like public.com or public, whatever it's called. But like Robinhood and Webull are like the most popular ones out there in my opinion.
Yeah. They're easy to like buy companies on. If you're going to be buying stocks and just holding them, I don't think they're bad. Although I would still prefer to go with someone like Fidelity or Charles Schwab if you're going to be doing that, because you might as well. You're probably going to end up, if you're going to be investing for a long time, you're probably going to end up switching to one of those two in the future, so you might as well just already start it there. But for sure, Robinhood's user interface is like the crispiest thing you could imagine. Like it's so good compared to other stockbrokers' phone apps. Like the other phone apps are so bad. They suck so bad. And Robinhood nailed it. And then they suck at everything else. So pick and choose. So
yeah, there's trade-offs. You know, if you're just looking for like an easy experience, like very beginner friendly, check out Robinhood. Mm-hmm. You know, like they're definitely not the best in other aspects, but they get the job done. You know, if you're starting out with like less than $1,000 or less than $2,000 or something like that, it's not a bad idea. Yeah. If you're just going to be investing, it's easy. They're easy to work with, and you can always switch to other brokers. I would say like the next level up, not necessarily like top tier, but like the next level up for like retail traders, I would say brokers like E-Trade, TD Ameritrade, maybe Tasty Trade or Tasty Works. I think they're like the middle tier. You know, they have a nice balance of, I don't want to say simplicity, but they're not extremely complicated. And at the same time, they do offer a lot of other features that the beginner tier apps and brokers do not.
Yeah, and Schwab just bought out TD Ameritrade, I believe.
Yeah.
So
yeah,
that's good for Schwab. I hope that they buy Robinhood and then implement their phone app. That would be sweet.
Yeah, that's true. So yeah, I mean, it never, like, you can always switch brokers. So if you start out with Robinhood, you can always like upgrade to like TD Ameritrade or whatever. You could also have multiple brokers at once. As you guys will learn, there's certain rules where if you start with less than $25,000, you cannot day trade too often. But there are ways to work around that. And honestly, it's not a big deal because you really shouldn't be trading that much anyways in the beginning in terms of day trades. So you can always have like more than one broker. I have a bunch of different brokerage accounts, but you don't have to. And I would say like the final level, arguably, is like you have some of those like top tier brokerages, like I believe it's like Lightspeed and like Centerpoint Securities and stuff like that. But that's for like a very niche trader in trading strategy. I would say like the next level up for like like the everyday person, there's a brokerage like Interactive Brokers or like maybe Charles Schwab or something like that.
Yeah, Lightspeed and them, they just give you direct access. So
Yeah. Well, Interactive Brokers does too
yeah,
if you're on their
so
pro.
does Schwab.
Oh, do they?
Yeah.
Okay, I didn't know. So yeah, that's good. Basically, what happens with like direct access is this happens with like a vast majority of all brokerages out there. When you submit a buy or sell order, that order doesn't go directly to the exchange. It goes to like a middleman first, and then they try and sell your order to a trading firm like Citadel. So you end up like, even though you have like free commissions, you end up getting whacked a little bit on your fill price. So like, let's say Apple's at $100, you might have to pay like $100.02, so it's like a very, very minor thing. With some of the premium brokers, you just go right to the exchange. But again, if you're just getting started out, a couple pennies per trade isn't going to be the end of the world, especially if you're just starting out.
Yeah, for sure. And
Yep.
most people start with Robinhood.
Yeah, and there's nothing wrong with
and
that.
then they hate on it a month later. They lose a trade.
But then continue to use
they
it.
They lose
a
trade and they blame it on Robinhood.
So yeah. So once you have your brokerage set up, honestly, the best thing to do would be to start dollar cost averaging into index funds. The S&P 500, maybe the NASDAQ, maybe the Dow, but honestly, you can't go wrong with the S&P 500. It's a little bit of a mix of everything. It has done very, very well over the long term. It has always recovered. Doesn't mean it always will, but if you believe in the U.S. and just United States companies, then the S&P 500 is probably a good thing to invest in. But there are multiple ways to invest into the S&P 500 and other indexes. So basically, you can't just buy the S&P 500. You have to buy it through like an ETF. So there are a couple of them out there. SPY is definitely the most popular one out there. It is extremely liquid, and basically what this means is like there's a bunch of people trading it, so it's very easy to buy and sell your positions like very, very easily. Like there's no problem finding a buyer or a seller for that. The next one is VOO. It is very similar to the SPY. The only difference is that it's not as liquid, but it does have a lower expense ratio. So it's like if you plan on like buying and holding it for like years and years and years and years, VOO, you might save a couple dollars just from the expense fees.
Is it like 0.01% difference or something? They're like the same.
It's basically the same. Like honestly, you're probably better off with the SPY unless you're investing like hundreds of thousands of dollars into VOO, and then you plan on holding for like 20 years. But like even at that point, it's not like a game-changing difference, Yeah. So consider just like slowly buying into SPY over time. And I if you're just starting out, you can't really go wrong with it. You're basically just investing into the market slowly over time. And even if it's not the bottom, you're buying a solid asset and you're doing it in a smart way, because like we said in the beginning of the video, no one can catch the tops and bottoms perfectly. So if you're just slowly buying in as the market's falling, when it recovers, the market might be right here and your cost average might be right there. So that's a profitable trade. As long as you're willing to hold, it should do very well over the long term.
Mm-hmm. And another one is SPLG, and that one's a lot less liquid than both, I'm pretty sure. But the only difference is it's the exact same thing as SPY, except it's just a lower nominal price. So like it's a cheaper stock,
Gotcha.
but it's the same thing. And that would be for if you have a broker that doesn't allow like fractional shares, then you would probably go with that if you don't have like a lot to invest. Because it's like 40 something bucks and SPY's like 300 something. But if you do have, I think on Robinhood you can even set up dollar amount, like recurring investments into something, and you can. I'm not positive because I don't have it, but if you could like recur it every week or month or whatever, and put like $50 in every week or something into SPY, and it'll do it automatically for you. You just got to make sure that you have it in your account. I don't know if it automatically stops if you don't have it. It should.
Yeah, I think it has that feature. So what's cool is like the SPY right now, the SPY ETF or SPY stock, you can say for simpler terms, is like $381 right now. But if you don't have $381 to put into that every 2 weeks or so, you can put like $50 in. And you can just put whatever amount in that you want. Basically, I think the lowest is like $1, which is very awesome. They didn't have that when I first started trading, so there's so many features that new traders have access to nowadays that were not available when we first started trading. And just trading costs have lowered a lot, which is awesome. When I first started trading, you had to pay like $7 to buy and $7 to sell on any position. So like let's say you were just doing like any trade and it was like a $50 trade, you would have to pay obviously $50 for the stock or option or whatever, but you'd also pay an extra $7 to buy and an extra $7 to sell. So it's like it's crazy. But now those costs have lowered a lot. So you guys are in a good position, especially if you're just starting out. So yeah, slowly buying into the SPY, it should do well over the long term. Moving on to the next segment, I think it's very important to familiarize yourself with the news. So there are many websites out there like investing.com, cnbc.com, marketwatch.com, maybe Yahoo Finance. There's a lot of financial news sources out there. I think it's very important to stay on top of that and see how world events impact the stock market. For example, let's say you see oil prices, oil prices skyrocketing. If you read those articles, you'll see how that has an impact on oil stocks and maybe even airline stocks because gas prices increase. And there's just like a bunch of moving pieces when it comes to just like the stock market overall. Like one industry has an impact on many other industries, and it's important to start to realize those connections when you're just starting out.
Mm-hmm. And you might see like news about an individual company getting crushed on earnings, like Facebook when Facebook got mauled, and then you would go, oh, maybe it's an opportunity, and then you look into it and might be an opportunity. So it's right. The only thing is if you're trading based on news, you like what CNBC puts out or something like that, if you're trading on it like they trade on it, you're probably going to lose because they, like these hedge funds and stuff, they have black box, they have stuff that scans the news constantly. The move happens instantly as soon as the headlines come out. Like you're not gonna finesse people on CNBC, like you're not gonna do it. It's just the move has already happened. It gets priced in almost instantly. So that's not how you want to use it.
Yeah, exactly. And that's a great point. So like look at the news and just like to read it and understand what's going on, but be very, very skeptical trading off of the news. So especially on these financial news sites, you're going to see articles like this expert who correctly predicted 10 out of the last 10 recessions or stock market dips or whatever, says now is the time to buy stocks or whatever. Like be very skeptical and avoid those things because they're just like giant traps for new investors. So stay away from that. And also, while you're reading these news articles, you're definitely going to see terms that are unfamiliar to you. So if you go on this website called investopedia.com, you could search like any stock market term on there, and they have amazing definitions and examples. So you could even just like scroll through Investopedia and learn so much. Like Investopedia is like one of the best resources when you're new, and it's free.
Yep. And if you, I love Investopedia, but if you go to like a stock chart or whatever, when news comes out, you can see, or just like if you see the news article an hour later, you go look at the stock chart, it'll have a huge spike, and a lot of times it'll just like fall back at least like half of what the spike was almost instantly. Like if you're trying to catch that, the chances of you getting burned are so high.
Yep.
The amount of those that continue up are very low compared to the amount that fall back down, like because the news usually doesn't change anything fundamental about the company, so it's like it's just hype, and then it gets thrown up on all these like day trader scanners, and they bid it up really quick, and then they sell it off, and it's just what happens.
Yep, exactly. So Investopedia is definitely your friend, and it's free. Another thing is watch our YouTube videos. I know we're kind of I guess, showing our own stuff, but we do have a lot of great content on YouTube. Like Hunter and I have put a ton of time, and even Tom and I put a ton of time into making some awesome videos. Even if, like, even some of our older videos from a couple months ago, there's some really good lessons in there. The YouTube videos are free, obviously, so scroll through them. We cover a lot of things, and they're definitely worth watching, especially if you're new. So watch our YouTube videos. There are a lot of great things to know with them. And then we also have a blog, so stockedup.university/blogs. Basically, we cover a bunch of great topics that are just important to know about that you don't see in too many other places. So Tom has wrote a couple blogs, I wrote a couple of them, and then Hunter's going to start writing some too. So that is also free. We have a ton of free resources, so check it out, use it to your advantage. And you can always ask us questions on YouTube, but a better place to ask questions is a Stocked Up Discord. The link for that will be in the description down below. It'll say like free stock trading chat room. Join up. It is free, and it's an amazing place to network with other traders, and you can just like tag Hunter, Tom, or me, and we will answer your questions. So join up. All in all, investing is an amazing thing to learn, especially if you're young. Like I can't even tell you how many people like who are older say, "Man, I just wish I started investing sooner." You know, it's such a rewarding process, even though it's complicated. If you take the time to just learn it, it will definitely reward you. So start doing it sooner rather than later.
The time in the market is way more important than like anything else. I know we covered this in a video a few weeks ago, but the difference of how much you have at retirement if you even wait 5 years is like millions of dollars difference, depending on the if you bought the S&P 500, because it's at averages about 10% a year. It won't get 10% every year. It'll drop like it did this year some years, and then it'll go up a lot like it did in 2020 and 2021 other years. So but on average, over long periods of time, it averages about 10% per year. And if you wait, so 10% will double your money in 7.2 years. So if you waited 8 years to invest, like that's a huge difference by the time you're retired, because that's a doubling on a doubling on a doubling on a doubling.
Right. Exactly. And another thing too is if you wait to invest, not only are you missing out on opportunity in the stock market or other investments that will, you know, give you a positive return, but you're also losing money due to inflation. You know, like let's say you have
Especially
thousands, yeah, especially now. If you just have thousands of dollars sitting in the bank account, you know, and we have inflation at 8%, or that's what they calculate it to be. We know it's a lot higher than that. You're losing that per year. Like I know it doesn't seem like it. Like let's say you have 10 grand in a bank account and inflation's at 8%, you'll still have 10 grand in the bank account, but that 10 grand will not buy you what it did a year before. So like you have to invest, whether it's in stocks, real estate, or whatever, just to not get screwed by inflation.
Even if you have a high interest bank account, what does it pay, like 1%? Like
high interest.
Yeah, that's
gosh.
Terrible. Like you're even when inflation's low, you're losing. Like inflation is at its lowest for decades at like around 2%. You're still losing.
Exactly. So you're encouraged in multiple ways to start investing. And in terms of the stock market, you really can't have a better time, because when you start out, you're going to learn a lot of tough things during this market environment that we're in. There's going to be some big moves both to the upside and the downside. And even if it's not the bottom, you know, now's a good time to start dollar cost averaging. So I hope you guys learned some things from this video. Investing is it's tough in the beginning, but hopefully this video helped you avoid a lot of the crucial mistakes that Hunter and I have made when we first started.
Yeah, I'm getting a package delivered right now, but
Gotcha.
I agree.
Gotcha. Awesome. So yeah, if you guys liked the video, make sure to subscribe. Feel free to share it with someone who you think should start investing or who is looking to start investing. Feel free to watch our other videos. They're completely free, and there's a lot of great information covered. Besides that, if you guys have any questions, let us know in the comments down below, and thank you guys for watching.